We have a volatile day in the markets as we close out another fun week. We got some great jobs data this morning. Are we coming in for that soft landing? I don't know. We'll dive into that and more on today's show. Before we get going, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice. We're definitely not financial advisors. We're a few guys who love following the markets, making our plays. But please do your own research before making any buys or sells. Kevin, we had jobs data this morning that came in better than expected. The expectation was 200,000 non-farm payroll jobs added. In July, the number came in at 187. The unemployment rate went down from 3.6% to 3.5%. Wages went up from 4.2% to 4.4%. So it feels like maybe this is like some data that points to a soft landing, but at the same time, it could be data that points to a bounce back in inflation at some point. What are you looking at as we wrap up a day in the markets?
Yeah, I mean, I was looking at the unemployment data, this morning, and I was like, okay, I don't think necessarily, like we talked about with the show, that this is going to be as important until we get into a true market collapse. I think we're going to start seeing the unemployment number actually go up the later on we get into a recession, as a lot of these companies are more reactive and trying to just survive to the bull market. It's what we've seen in the past. 2008 is probably the greatest example we have of that, where a year after the market crashed, we saw the peak of unemployment. But in the past hour, I've been all eyes on TradFi. These major indexes just absolutely sold off hard as hell. I mean, I'm really interested to see where these close. These said the dollar made a good resurgence back. We're above the 102, which we were unable to close last week above, and now we're above it. So we might get a weekly close above 102, and that is absolutely bullish in my opinion. Again, we were talking about a retracement. We needed to see it. We got some of that with the data coming out today on unemployment, but it's bounced back pretty significantly from where it was earlier today. So I don't think anything's really changed on that front, but I'm really excited to see some movement and some life in the markets, even if it is sell off at the end right here.
Yeah, we saw it sell off really hard a few minutes before we went on. It's recovering a bit. We saw the VIX, the volatility index, take a huge, just green candle after green candle on the 15-minute over here.
Oh yeah.
It's starting to come back down a little bit from where it peaked at, seeing a little bit of bounce in tech stocks. We see Apple reported earnings yesterday that came in under expectation. We discussed that on yesterday's show. They're getting beat up pretty good today, down about 4.5%. Tesla having a down day, but Amazon doing great after they reported strong earnings, up to 141 a share. We have some Wall Street analysts who are giving a price target of 175 for that. So could be some potential more room to the upside on that one. With crypto being pretty boring and ho-hum, and the earnings from Coinbase yesterday, they're down a little over 2%. Once again, as we all know, trading volume is not great. So, they're not making as much money, but they are managing their money very well. There's a lot of positives coming out of how they are managing their assets and avoiding too much risk at this point. So props to that. They could probably show a lot of these banks how to manage their money better, but hey, we're just some crypto guys. Like, none of us know anything, right? So that is what I'm seeing in the markets right now. We don't really have too much on the earnings front today. Earnings season is starting to wrap up. We got a few more weeks of it. Mr. House, good to see you. Randy, as always, appreciate you being here. And if we look at the data around the Fed rate decisions, we heard from multiple Fed officials today, Austin Goolsbee and Raphael Bostic. Both of them seem pretty content with the direction the labor market is going. And to me, it sounds like each of them are totally fine if we stop raising rates. Yeah, they gave off that tone in their interviews with Bloomberg separately that, they think that we're at a point where rates are restrictive enough and we can just kind of wait and see what happens, as opposed to, having more hikes in the future. So as I'm looking at the probabilities at this point, September, we're at about 86% chance of no rate hike. In November, about a 73% chance. So and overall, it looks like about a 25% probability of at least one more rate hike this year. It wouldn't surprise me if we got, some good CPI data at least next week. There is, as we look ahead to next week in the markets, we have CPI on Thursday, PPI on Friday. The CPI number is actually expected to be year over year a little bit higher than it was last month, but that was because the movement last month was so big based off of energy costs the previous year. So the market is pricing in CPI at 3.3%, at least for the headline number, and the core number still at 4.7, which is why I'm just like, I don't, when these guys say that they're comfortable with how restrictive it is, if it comes now, let's say we see a surprise to the downside and it comes in at like 4.3, 4.2, which isn't unheard of, right?
Right.
Then I could see a scenario be like, okay, maybe that makes sense. But if we still see a number that is in the mid fours for core inflation year over year, that to me is not the sign that it's time to take our foot off the gas. Like there's been no discussion around like lowering rates. Like they're going to have to remain restrictive for a while. And with that will continue to be higher costs of borrowing, higher debt that is racked up by Americans that are already like up to their eyeballs in that shit. So this is not like, I think the markets got a little ahead of themselves this morning, and we're starting to see there maybe a little bit of a realization of, oh shit, we got a little too excited there. As the charts for everything are like a nice little, like the McDonald's arches, baby. Yep. It's like, oh, up to start the day and then right back down. Or if you're looking at like the VIX and the dollar, it's going the other direction. So I think we still need to it was a good piece of data, but it's going to take some time. Like this is not a quick fix. And the Fed officials know that. I think they just have to be like, they're walking a tough line right now of trying to, be honest and answer these questions without, the markets are looking for whatever reason they can to move up higher. At least that's what I'm seeing. And so it's a tough spot that the Fed presidents are in.
Definitely. I just want to share this one tweet from Zero Hedge. I'm sure most of you follow them on Twitter, but that's where I got the data from this morning. This was a look at May and June revisions for payrolls. You can see that they were down in May 25,000 payrolls, jobs and payrolls from the first revision, and then June we can see it was revised down by 24,000. So this, along with the ADP stuff that we got yesterday, that was yesterday, correct? I can't remember these days anymore.
That was Wednesday.
Wednesday, yeah. ADP was Wednesday, along with this data that we got today, and then in line with the unemployment data that came out. It's really hard to make heads or tails of this job market, right? It's we know that it's very resilient. We're not in a place where people aren't working. There's definitely people working, right? And in some of the data that we got from Wednesday, I think really shows that people are working more than one job. The thing that's really scary is, yeah, absolutely. With CPI next week, I think we're probably going to see another number that comes in perfectly fine, right? Maybe it comes in a little bit below expectations. Seems like expectations are very fucking low, so we're not really shooting them, too far above and beyond here. But it's very possible that it's just okay. And again, that's because oil and energy and natural gas last year were just absolutely insane this time of the year. So yeah, sure, I believe that 100%. But there's something on my bullshit meter that just doesn't buy into a lot of this, and we need to keep this in mind. There's a lot of things that are coming up in September and October, right? Sure, we have the FOMC meeting in September. Do they act on it? Who knows? The next one is in November. Was that November, correct?
Yeah, November 1st will be the next decision after that.
So there's a lot of things. We're kind of a lot of stuff that's probably coming up in October that's really sandwiched in between. We also have, I think, student loan payments are going to be starting to be paid in October. That's when the first ones are going to be due. That's the end of, we're going to start getting, that cuts off Q3. So then we're in Q4 at that point. There's just a lot of things that line up. And if we know historically how markets move in 3 months generally. They move in March and they move September into October, right? That's when we start to see more volatility come into play. And again, we're seeing the VIX start to pick up a little bit. So that's a good sign if we're anticipating, some market moves coming forward. Is it going to be a bull market? Is it going to be a bear market? I think that we're still going to continue with the trend, and the macro trend is still to the downside, right? So I definitely question a lot of what's in store, what's in play for us. We could get August could be an okay month in terms of data, something that just doesn't move the markets too much. Maybe we see a little bit of selling off because people are taking profits off the top, but this could also just be institutional players just absolutely saying, you know what, it's been a great ride. Let me just take a little bit off the top and, we know what's going on. And one thing that might be a huge indicator of that is what Jamie Dimon and JP Morgan are saying today, that they don't see a recession in the forecast at all whatsoever, and that the Fitch ratings just don't matter. So again, I don't take people at face value. I really don't. I'm willing to go out on a limb and call bullshit when I see it. And I'm calling bullshit right now on a lot of the bankers. I think Bank of America is another one that just came out and said that they don't anticipate seeing a recession too. All right, that's fine. But I do anticipate seeing oil going up a lot into this year. I expect energy to be going up into the winter months. Guys, it's going to get cold, right? And especially for a lot of countries in Europe that rely on natural gas, it's probably going to be really expensive. So I'm not saying that the prices are going to go up, but I definitely anticipate that we're going to see some volatility and movement. And whatever that reaction is, it's probably going to be pretty strong. So seeing this data today, I'm not necessarily concerned about jobs data until we start seeing some of the market collapse. And then once we start seeing the market collapse, I think it's going to take off, and you're going to start seeing a lot of this being blamed on some type of escalation or something out of our control. And then people are going to be like, we could have never accounted for this. This is a black swan event. And then that's how people are going to get away with a lot of their bullshit that they've been selling you. But that's my little Friday weekly close rant. But yeah, for the most part, the data, I'm just not taking it as face value anymore. It's just, okay, I understand it. Let's move on. Let's see how the markets are reacting. Because again, the markets are not the economy, and the markets are going to do something different than the economy, inverse, just to fuck with people. And we'll talk about that when we do market psychology next week.
Yeah, absolutely. Got some fun shows coming up the next few weeks. There's going to be a little bit of a lull as far as earnings and data go, and with no FOMC this month, we have a little more time to touch on some other topics. We're going to discuss market psychology, different cognitive biases that impact decision making, and how to identify and then work through those, because that is definitely something that will slow you up as a trader. If there are any other topics that anyone wants us to discuss on the show that you find interesting, drop a comment. We'd be happy to dive deep into those as well, because this is a fun game that we play here, and I enjoy talking about the nuts and bolts of it. So let's look at the charts a little bit as the markets begin to wrap up on the day. We're seeing, we saw that move down, and it's just kind of hanging out. We're kind of in that range now. I think the biggest move of the day already happened. And I could be wrong. Maybe things just, crater as we wrap it up. But what is catching your eye in some of these charts? I know the total market cap for crypto outside of the big tokens has been moving. We got the VIX pulled up right there. What direction do you want to take it, Kev?
Let's just take a look at the VIX real quick. Again, we bounced right off this level down here, 1271. We can see that, we have found this is pretty good support in the past, back in 2018. Sure, we went below it, but we always come above it, and it seems like we're resting on it pretty well right now. And we pushed up pretty strong, right? Again, this is just going in line with what I've been saying. September and October is when we tend to see the markets move. So seeing this little push up here, I'm not surprised. If we can actually look back into maybe September, October of years prior, we could see September right here. Where are we? September, October pushed up a little bit, came down. You can even see right here that we saw some volatility, extreme volatility here in 2020. October right here shot up, and it does a little bit of consolidation, and then it eventually just pushes up. But VIX, keep an eye on that, because that was dead for a while there, and it's always good to see volatility once we start seeing some red in the markets, and we're definitely seeing some red in the markets this week. If you take a look at just weekly closes for some of these things, we can see that the S&P looks like it's probably going to close in the red this week. This will be the first week it's closed in red, and since July, the week of July 10th or July 3rd, my bad. So 4th of July week. This is a pretty good move, right? This is a bearish engulfing candle. It absolutely went down below what the past 2 weeks, so pretty much erased the gains of the past 2 weeks. That's interesting. If we look at the Nasdaq as well, we can see that it's a bearish engulfing candle, completely eclipsed what previous week's gain was. And if we look at the Dow, it's another bearish engulfing candle. So, I mean, we're hitting major resistances in these parallel channels within parallel channels. And, it's a fucking crazy game, TA. But seeing some of these bearish engulfing candles at the top, and seeing some of the news come out, and just market psychology and sentiment and things that should be, if we're in a bull market, should be going down, are actually giving us a pretty good fight right now. Hence the dollar right now is above 102, which we didn't close above 102 last week, but it looks like we are going to do a pretty good job of doing that today. This blue line is important, 102.035. I'd hope that we get there within the next 3.5 hours that we have left of trading in the weekly. That'd be great. We were clearly above it. I mean, the height of this move this week, we were at 102.843. That's a great move to the upside, right? And what I'm seeing here, if we look even on the daily, just because the dollar is always so interesting to me, is that we got 5 waves on the way up, which completes our first, wave one. Now I'm anticipating 3 waves down in wave two, then another 5 waves up in wave three. So I do anticipate if we do get 3 waves here, that we're in this pattern. That would be confirmation of it. And for me, I think that we could see. Well, we'll have to see how wave three goes or wave C, because that could be confirmation that we're in an impulsive move to the upside with the dollar, or if we're just in a corrective, not a corrective, but just a regular, A, B, C, D, E 5 wave moves to the upside with the dollar. So if it's impulsive, I think that we'll definitely get above 105.651, maybe come below it and then push up a little bit further to 107. And that would be in line with a lot of the short squeeze talk that we were talking about earlier in the week, that the dollar was extremely oversold and people are starting to push up on it. And, if we're pushing up 5 waves here, because we got 3 waves prior to here, we probably get a 3 wave or maybe a 4, XYZ or something like that corrective pattern before we start pushing up more. I don't think that the dollar is showing any signs of weakness. If we're looking at this on the macro, weekly, it's going to be pushing up here. And on the monthly, obviously, you got plenty of room to the upside. So the dollar still looks
All of
strong.
your lines. There's just so many lines.
All right, I'll get rid of this one because we all know where it's going. But let's get rid of this, and let's get rid of this corrective pattern here. But for the most part, if we can start closing this weekly above 102.035, that's a really good sign for the dollar. I mean, we're not far, guys. We're literally down.
It's fighting that right now. I mean, we're seeing
right now.
The VIX is coming down. Things are starting to turn back up in TradFi at the moment. So this is kind of an interesting and fun to watch tug of war as we wrap up the week.
I mean, look at how fucking Apple's doing here, right? That's Machu Picchu. Look at that fucking drop. That's absolutely insane for Apple. It's down $8 on the day, negative 4.32%. But I mean, in context, this just wiped out the gains of pretty much what? 1, 2, 3, 4, 5, 6 or 7 weeks of profit that Apple has seen, all in one day. Pretty amazing.
So it's interesting. Let's talk about that for a second, because we've discussed that things have just been so hot lately.
Mm-hmm.
And when I look at that, and when you tell me how long of a period of time it took them to move up, and how this earnings report just wiped it all out, like, guys, that's what we've been saying for a while now, is like, this rally we're on has been led by AI, and it's been led by a few big companies. And at some point, the expectations are so out of whack that if they don't come close to that, it's just a bloodbath. Yeah. And that's why I still think so much of the stuff is overvalued now. Like,
oh, definitely.
Like I'm still an Nvidia holder. I'm not going to sell my whole position because I don't want to deal with taxes and timing things and all that stuff. I sold some, but I still think it's overvalued. And they got earnings in 19 days. On August 23rd, we'll get Nvidia earnings. And it would not surprise me if we saw a similar situation to what's happening with Apple right now. Like, all of these companies, it takes something like what Amazon did yesterday, which was have an absolutely stellar earnings report to continue this momentum up. And of all the big ones, quite honestly, Amazon, had been underperforming compared to Nvidia and Tesla and Meta this year. So like, they didn't have as high of expectations, but they still crushed it. So
yeah,
it is definitely something to think about when we have these really, really, these stocks that have been up 100 to 200% in less than a year. Like, if you're a shitcoin trader, that's no big deal. But when you're, an actual investor in the markets and not just gambling all the time, this is that's a huge move. And it is why it's never wrong to take profits in that kind of a situation.
No, not at all. And again, I think Amazon might have been underperforming because people are starting to move a little bit more defensively, right? That's very possible. That's why we're starting to see some of these, growth, stocks, these tech stocks absolutely sell off a little bit here near the top, right? Amazon had a good report because they're not just 100% a tech company. They're a company that provides a lot of goods and services for consumers, and it's not necessarily a company that charges you a shit ton of money too for some of their products, right? It's you pretty much get what you want. It's almost like the internet version of Walmart, in my opinion. It just seems like it's a safe bet. I'm not saying that it's not prone to getting a drop in the market. It's gonna drop in the market if everything else is dropping. But Apple, they're selling stuff that people don't necessarily need, right? I mean, sure, you need a phone, but do you need an iPhone? Do we need Macs? Do we need iPads? Any of this stuff?
Do you need a new one every year? No.
Exactly. No, but they make them like shit, so you have to buy them. But yeah, I don't think people are buying into that right now. They're like, you know what, my phone's only about a year old. It's still good, and that's what we're gonna start seeing with some of these companies. And then you brought up Nvidia. Look at AMD, right? AMD got its ass
Mm-hmm.
kicked. Next
Yeah.
day it started trading. So what does that say about Nvidia? I mean, it's very possible that we could see something very similar to that. I think Amazon, maybe it wasn't the most performing out of all of these, but it's definitely the one that's going to be the most resilient to price fluctuation, in my opinion, when it comes to the downside. That's why I don't think, I mean, Amazon's been there before. It's been through what, 2 recessions. It's been through a stock, an absolute bubble, and it's been through fucking 2008. They're going to be fine. I think there's enough money pooled in there where people are going to be safe putting everything in there. I'm not saying that Apple hasn't been through all that shit. They've been around the fucking stock market for years, but decades. But yeah, it's just what are you offering that's valuable right now in this time? Amazon's got it. I don't think Apple's got it. But enough of Apple. They're already taking a big bite out of that today. Let's go into some of the crypto stuff. So, guys, we got to talk about this one. This is Bitcoin dominance. This is huge, right? I said that it broke out yesterday, and I mean, it's at 50.28. Not too long ago, it was at 49.49. That's a huge jump that we've seen. Obviously, we crashed when XRP came out. We'll look at XRP in a second, but this is absolutely insane that we're closing the weekly out of this channel. This shows me that we're going to see bullish continuation here. We've made this corrective move. Is it possible that it's not over and we come back down a little bit? Sure. I don't necessarily think it's going to come down lower than 49.43%. I just don't see that with the amount of volumes that are, on the exchanges that's moving in and out of some of these assets. I think if anything, we're going to see more of the alts absolutely get destroyed based off the total 3 chart, which we will show, because that's been bleeding ever since we've been covering it, and it's absolutely insane where it was. It was at 360 billion. Today it was at, I think, at the lowest 338. Yeah, it's at 338 billion. So it's lost 22 billion dollars since we started covering from the XRP video. And then if we look at this on Bitcoin dominance, this thing's rising, and we can see that sure it might be a little bit overbought, today. But for the most part, this thing is just absolutely breaking out. And we can see that there's even gaps like right here on the dominance chart. It's coming down a little bit, but I think we're going to start seeing this thing just absolutely rise. And we'd have to see some of the dominance of other assets definitely drop in order to see that full potential of what Bitcoin dominance can do. And what we've been seeing is that XRP dominance is absolutely tanking. This is XRP dominance right here. And this is very in line with what we're seeing with the price of XRP. XRP shot up to 94 cents that day. And currently it is sitting at, where is XRP for me? It's sitting at 65 cents. So we've bled almost 29 cents from XRP per coin since the news broke out that it's not labeled as security from Judge Torres. Absolutely wild. We see that XRP dominance was at 402. It's currently at 3.07. A lot of that bled back into Bitcoin dominance, but we can also see that a lot of it bled back into fucking USDT dominance, right? USDT dominance is absolutely going up. So Tether is pretty strong right now. A lot of people are kind of afraid that they are, that the market's kind of volatile. They're not sure which direction it's going to go. So they just want to, be risk off here. That's what I'm seeing with dominance and stable coins go up. So if we look at the actual price of Bitcoin, again, I mean, this has been boring as shit, guys. I'm sorry, but we're still in the supply zone. We're just hanging on to the S end of it. Literally, we're on the S end of it right now. Lose 29, and that's you're under the supply zone. But I think that we've been swapping orders nonstop. I've been seeing supply come onto the exchanges, and people have dropped like $57 million worth of Bitcoin, $36 million worth of Ethereum, and they're just putting it onto the exchange. And they're just slowly selling. So every time someone buys, they're just selling, and they just keep doing this so that they can, average a pretty decent price for what their limit order is. So that's what I think a lot of the big players are doing right now. I don't see them coming in and buying, even though there's a lot of stable coins that are going onto the exchange. I think a lot of that is more people just shorting the market. Again, you might see, I don't know, $100 million worth of Tether go onto the exchange. Doesn't necessarily mean that they're going to go buy something with that. If they're putting that on, KuCoin or Bitfinex or whatever, one of these where you can short, futures, perpetual contracts, it's probably what they're doing. And they probably open up multiple positions and they just have enough on there so that the price does go higher. They can just, DCA back into it and they raise their liquidation level. But that's what I'm seeing with Bitcoin. It's absolutely boring. I want to see how this closes the weekly, because I honestly believe that we are in a pretty bad place for the weekly if we keep going down. Like, probably going to move considerably on the stochastic RSI. It's extremely low right now. well, it's going to be fairly low if we do go down more. But I think I don't know if we're going to have enough strength to push up again into the 31, 32K level. I don't know. I'm not going to be contrarian here and say that it's going to, but I see that we might be filling this massive gap, this red box here. And that seems like the more likely scenario because, once again, we are way above the 50 moving average and the 200 on the EMAs for the weekly. And that 50 coincides with a lot of things right here. It's the bottom of this parallel channel, that fills that gap, and it's the moving average. So that's where the price has been moving over the average of the past 50 days. That's going to be pretty significant support. So I'd be really interested to see if we close relatively where we are right now for the weekly, but then tomorrow, or the weekly close, once it comes, we start seeing just absolute sell-off. Again, that doesn't have to happen, but it wouldn't surprise me because I would just anticipate a lot of people starting to short at the bottom of that parallel channel, and maybe we push back into the supply zone just to liquidate people who are shorting late. It's the fucking game that we're in. It's how they're going to play it. They're going to play it dirty. Jamie Dimon's lying straight to your face, and crypto's even worse, guys. There's tons of people that know where your positions are, and they're going to absolutely liquidate you. And I think that's their
BlackRock loaded up on Bitcoin last summer at like 16K, and then they were just hyping it up at 31 so they could double their money and just dump on your heads. That's how it works around here.
Exactly. And then if we look at the total three, again, I've been looking at this chart for the longest, and I say this one more than total two, mainly because look at this. This is if you were walking out for picture day and you had this red candle hanging out your nose, everyone think, that's a nasty booger hanging down. I would anticipate that to drop straight down. I think that's what's going to happen here. But the question is, when is it going to go? You're overbought on the weekly stochastic RSI. The volume's been dropping as the price has been pushing up. It's just hanging over so much, guys. Like, this is insane how much this is hanging up. We were at, we opened this week at 350, or we worked up to $354 billion, and we're currently at 338.7 billion, and we still got a few more days to go on the weekly close. We got rejected off this 200 EMA. We're hanging out for this. This is an extremely thin parallel channel. I anticipate this to break, and when it does break, it's going to be some massive catalyst. Obviously, it's a lot of money that's going to be driving out of the markets. But we're going to go to this origin. That's sub $300 billion. And what does that mean for total, just the total market cap? Well, this is going to probably complete this head and shoulders. I don't necessarily see a scenario where this head and shoulders doesn't complete here. Again, Bitcoin, I think, is probably going to go down rather than go up, even though I do think that it's likely that it's going to go up because nothing goes down forever in straight lines. There's definitely going to be liquidation events. People are going to get screwed shorting too late or longing too late. And I think that right here, this is going to be filling this gap. We're going to see the total come down. We're going to see us go maybe close to sub $1 trillion in the total market cap. And that would be a majority of just altcoins bleeding out. Maybe that's what pushes Bitcoin up, right? People are afraid of altcoins. They still want exposure to the crypto market. Maybe they think that maybe Bitcoin's the better play right now, and they push everything into that. So we'll keep an eye on that. Bitcoin dominance, regardless, I think is going to go up, whether the price goes down or up. I think Tether dominance is also going to be on the rise coming soon too. Maybe we get back above 8. I think Bitcoin dominance, if we reclaim 52%, then maybe we just start making that transition to 57%. But again, it's going to be a battle of watching where dominance goes, one between the other. And I do want to pull this up too, even though I talk about CZ all the time. He doesn't deserve my breath speaking about him. But if we look at this on the weekly for BNB dominance, I didn't know that the dominance was this high for BNB. It's 3.31%. Say this thing goes bye-bye, fucking the end of the world for CZ and the 150 million registered users that don't exist. This 100% would be split between Bitcoin dominance and Tether dominance. So, you could easily see Bitcoin dominance, if this were to collapse in one day, shoot up from where it is right now at 50.27 to, arguably say 52.37 or whatever it is. And then Tether dominance, it'd probably be more stable coins than it would be Bitcoin. Maybe you'd see the stable coins pull into Bitcoin afterwards just because people are so afraid and freaked out. That's what I'm seeing. And the weekly close, obviously, for Bitcoin is going to be really big because I think the move is actually going to come after the weekly close. It could come before it. We could just absolutely tank, and then next week we open up and maybe we start squeezing some shorts, late shorts. But I definitely think that once we get to Sunday, Monday, that's when we're going to see a lot more of the volatility for Bitcoin and crypto. Could be a boring next 2 days here unless, some news comes out where it's like DOJ is like, yeah, no, fuck CZ. We're going to drop charge. We're going to place so many charges of fraud on you. And, we just see a mass withdrawal that doesn't exist because maybe they don't have all the coins in their exchange. But also look at this. This is just to prove that these exchanges are fucked. Look at KuCoin. I mean, that's just a steady decline on the weekly, right? Right up here is when they say KYC, and that's also when they just RIP'd, and now they're going probably for $5.12 or $5.51. Just think about this. Back in March of this year, it was at $9.72. We're pretty much half of that right now. This market's absolutely violent for exchanges. There's no volume, and this is proof that we are not in a bull market. We're absolutely in a bear market, and I don't think we're done yet. Again, that's accounting for the global macro outlook, and also just these exchanges are not seeing people and money pour in. We're seeing money pour out, if anything.
All right. I think that is how we're going to wrap it up for the day. It's been a fun week in the markets. Great week of shows. We appreciate everybody who has been here with us. Randy, Mr. House, I know Ace is going to be watching at some point. Payne, Chris Hoddle, all you guys. We appreciate you. Thank you for your support. If you have not yet, hit those buttons down below. Like, comment, subscribe, share us out on social. We've seen more people doing that. That is awesome. We got some fun stuff in the works. We're going to keep this going as long as you'll have us. So have a great weekend, everybody. We'll be back on Monday to start the week off fresh. Take care. See you next time.
Take care, everyone.